Welcome to another episode of Sunshine State of the Market. We are in our new office, in our new little studio here. We built our feature wall specifically for the podcast, if you can tell on the wall. So we're here with Joe DeMarco, and we're going to talk all things real estate. We're going to talk about second segment on appraisals, how that's affecting our current sellers, and also how Joe's got a way to mitigate that problem. And then we're going to talk just openly about what's currently happening in the worldly event. So let's go, buddy. How's this market going along?
Well,
number one, how do you like the office?
I was just going to say, I love the new office, right? Getting settled in.
Yeah.
Big props to you. It wouldn't be decorated like this without you. It'd still look like Minor Baker's office. Still bare, like a bachelor. You did a great job. It's great. We're getting settled in. Hopefully, everybody here missed us. Everybody's going to be watching this.
Yeah, absolutely.
We haven't done one in...
It's been a while, yeah, but it's been
right?
super crazy.
We had a lot going on, right?
A lot going on.
Took a lot out of us. Getting settled in here, getting this place set up. So we're finally back.
Distribution employees, new marketing manager.
Yeah.
It was a continuous chain of events.
Yeah.
But you can thank my OCD and compulsive behavior with this, because I know you got text messages and you sort of blocked me at some point.
Yeah. It was like it was like moving into the house with the wife. It wasn't, she took care of everything. I just had to sit back and wait for the final result.
This is the best.
I
text them everything from forks and knives to glass. Yeah. The only thing is I don't want any bullshit afterwards. Like, I don't want to spend that money. So I made sure I sent it to you. You maybe may or may not have approved it knowing what the costs were.
It's fine. It all turned out well. So, and in the meantime, we continue to do business.
Mm-hmm.
The market's been the market, right? It hasn't been horrible. It hasn't been phenomenal. It's been steady. I think actually in July, I actually had personally my best month ever in the mortgage industry. I mean, I closed the most amount of loans I've ever closed in one single month, and I had, as far as
in your history as a broker,
as a loan officer, I had my biggest month ever in July, both volume wise and unit wise. So.
Is the market bad?
It's not. I think it's I think it's for people who just keep the blinders on, don't get distracted by the outside noise.
Yeah.
And you're going to be busy. I think I guess it just goes to show you. There's still plenty of buyers out there. There's plenty of sellers out there, even with the distractions in the market today, especially with the Iran war. And August looks like a good month, or June was a big month. July was a little slower than June, and then August looks like another big month. So it's just showing that there is activity out there.
There's definitely activity. I mean, we had a huge year as well. I think we're into 55 or 56 transactions. We slowed down. We did a lot, 40 to 50 of those in the first 4.5 months of the year. So it was kind of crazy. But again, we needed July. Even July's been quiet. We did a few deals here and there.
Yeah.
But we needed that for me specifically to get my humanity back, because when you're running at such fast pace, you lose a lot in the progress, right?
Agreed.
So July was good. Now we're rested. August, kids are going back to school in a couple of weeks, which you're starting to see the market getting picked up again with resale showings are coming back in, which is great. Also, our rental business, we have a property management company, so we rent out properties for clients that bought investment properties. And I've been messaging our clients, just hold tight. We can get crap in there, or you're going to wait, because you're going to have a slowdown period. And just prior to school, we're going to have influx of new tenants coming in, which is what it is. We're writing up 3 contracts today, leases, and that's basically on that one little project that we sell a lot of those investment properties. And so it's good news, right? And Florida's a weird market, right? It's I'm starting to get accustomed to it, because up north is very linear. It's very easy to predict. Here is it's pretty nuts. It's you're full gas and it just engine stops, and it's full gas and engine stops. So it's and nothing really makes sense. Anything that made sense up north, it's the opposite down here. Because I'll give you an example. When sometimes you have listings, and usually you keep lowering the price until you get a buyer. That's logic, right?
Yeah.
So you lower, and then you raise the price, then you sell it at a raised price. It's it's
doesn't make sense.
Anti logic.
Yeah.
But again, we're getting a hang of how this market is functioning, which is good.
Yeah, I find this market goes it goes strong from November till April, May, and then it tends to cool off during these summer months. and then boom, again, back in September, October, it starts
that big influx of
Yeah,
buyers coming
yeah.
back. But I mean, ultimately, like even for our resale side of it, we've been getting continuous showings. It's not like crazy like up north.
Yeah.
You get 10, 20 showings a week. You're getting like 3 to 5 a month, which is damn good for Florida. I remember last year we get 1 showing per month. Now we're getting like 3 to 5, you know, so it's not horrible. Like, again, it's starting to pick up. Actually, I got some data on inventory. This is a huge factor, like I always look at going forward.
Well, even with on the mortgage side, right? Ever since the Iran war started, right? And people worry about interest rates because of the Iran war and things of that nature. They really haven't moved a whole lot. I mean, we did hit a little bit of an elevated high last month. You know, we got up to about 6.7%, which was the highest we've seen in the last year.
30-year mortgage?
Yeah, in a 30-year.
What about the Treasury?
The Treasury's at like 4.6 today. Now, it started out at 4.6 today. It's starting to come back down a little bit. So, you know, but overall, it's been kind of steady. We had a little spike at the beginning of the war, and then it kind of settled down. So, and then with the new Fed chairman that came in, Warsh, you know, he held interest rates steady, which everybody kind of thought he would. Now they're talking about possibly bumping that up a little bit in September. We'll see. Again, it's probably going to all be predicated on what happens here. Inflation did come down a little bit. We're down about 3.5% in inflation, so that helps a little bit. And if if you believe that interest rates are tied to inflation, and I do, I think it's, you know, inflation and obviously the Treasury. We'll see, you know, if this war doesn't mess things up and we can get this cleaned up a little bit. I think we'll see rates, you know, ease up a little bit and get back down to those low sixes where we were.
Pre-Iran war in Feb, like ultimately we were going for rate cuts. I know I have some of the mortgages on investment properties and primary residence, like they call like, we're going to renew your mortgage. I'm like, hold on, just you know, hold your horses. We're going to do it like in 6 months from now because, you know, rates are going to come down the way it's looking. Then this war springs out of nowhere. And ultimately now we're where we're at right now. So I just talked to a tenant that's going to be renting one of our properties, and he's a reserve in the Army, and he's getting not deployed, he's getting sent to training. So it looks like they're going to be deployed. Hopefully not, but I mean, that's pretty scary to know that, like firsthand, right?
Yeah.
Talking about inventory too, I just wanted, because this is a big factor on how I do business and how I can rate the market. So currently right now, and this is Bonita Estero, so I did every type of, I did single family dettaches and townhomes. I didn't put condos in the mix because that's a whole different market. We usually do like non-condominiums sales. So if you look at the inventory right now, like in Bonita Estero, it's like 4.2 months of inventory. That's low.
Low, yeah.
Yeah. So you take a look at back in March of 2025, it was 8.8 months. So we shed almost 100% of inventory.
And how does that happen? What causes that? When you say that, what does that mean for the average guy?
So what that means is basically buyers are coming back and buying up what's currently on the market. So now prior to this, there was listings coming on the market, more listings coming on the market than buyers existed. Now it's like whatever's getting put on the market as a new listing is getting absorbed by a buyer. So think about it. We're at 8.8 months of March of last year, 2025. We're at 4.4 months of this year right now at this point. It's literally 100% drop off in inventory, which is great. And for a Florida market, it's fantastic because even if you look at previous data pre-COVID, like normally, like Naples Park, let's just a specific area. We'll talk about a specific area. Naples Park, normally pre-COVID, it's like 9 months of inventory. And we got to about 12 to, and there is actually high. It was 15, 16 months of inventory. Now it's down. And then just one more factor too, like average sales price too. So this year here, the height of, let's say Bonita Estero, we'll just talk about that, was $725,000 average sales price. And then April of 2025, it was $699. So, you know, what does that work out to? 5 to 7% in increased value. The thing is, if how everyone bunches up forward, it's like, oh, it's gone up or it's gone down or this looks bad, this area. But we're focused between Collier and Lee County. That's our market here, right? Realistically. So I'm looking at that and how that's functioning for especially clients that have purchased secondary properties, investment properties, and also obviously our investments as well. I want to make sure that we're in a good market, which we are. Yeah.
Good. Yeah, well, the other thing I want to talk about today too was, because it happened to you, right? And it's come up a couple of times.
Second segment?
Yeah. Okay. With appraisals, right?
Yeah.
I want to just role play with you a little bit. You're a realtor.
Yeah, I think so.
I'm a mortgage guy, right?
Yeah,
We're doing a deal together, and we get an appraisal done on a property, and obviously I'm going to get the appraisal. Yeah, I'm going to get the appraisal first. And the purchase price was $500,000 on that property, and I got the appraisal back, and it came in at $475,000. Mm-hmm. So I'm going to give you a call, Steve, and I'm going to say, hey, Steve, I got the appraisal back on the DeMarco residence. Unfortunately, the appraisal only came in at $475,000. Your first reaction is going to be what? Before we ever had this conversation, your first reaction was...
So it's either I'm going to want... Okay, $25,000 is not a big deal, so I want my clients to put more money down or have a reappraisal.
Right.
But $25K is not enough to do a reappraisal. But let's just say...
Yeah, so what typically will happen in that instance is, if this was a conversation with another loan officer and most real estate agents, everybody in the transaction is going to think that buyer either has to come in with $25,000 more, or the seller has to lower the purchase price by $25,000, right?
Yeah.
And that is not the case, right? Obviously, the first thing you're going to want to do is see if you can get the seller to lower the price down $25,000.
Sure.
But in the event that the seller doesn't want to lower the price $25,000 and the buyer wants that property because it's the property in the area they want to live in, the school district they want to live in, that's going to be their forever home. They're not worried about a short-term value right now. It's a long-term play.
Fair enough.
The buyer does not have to come in with that $25,000. And the reason why is...
Tell me the reason, Joe.
Here's the reason. Let's say the purchase price on that house was $500,000, okay?
Okay.
And the buyer was putting, let's just say 20% down, right? Because around here, most people are putting 20% down. So times 80%, okay? That means that they're financing $400,000.
Okay.
Okay? And at that $400,000, they were at 80% loan to value. We can keep the loan amount the same, okay? We can keep the interest rate the same. What's going to happen is the bank is going to finance a portion of that money, right? So if you're at $400,000 loan amount, that was the original loan amount.
Yeah.
We keep the loan amount at $400,000. We now divide that by $475,000. That now puts us at an 84% loan to value. So now we are over 80. We're at 84. So now we're in mortgage insurance territory, right? So the borrower now is going to have a choice. They can say, hey, I'll pay that mortgage insurance because on a 780 credit score or 700 credit score and only an 84 loan to value, your monthly mortgage insurance is going to be minuscule. It's probably going to be $50-some a month. Or the buyer can opt to pay what's called single premium mortgage insurance, basically buying that mortgage insurance out. And the cost to buy it out singly on that deal is probably going to be somewhere less than $2,000. So instead
what is that $2,000? You got to come out of cash with it?
They'll come in with the extra $2,000. So rather than come in with $25,000,
you pay $2K.
You're paying $2K, and you still got the deal. It's the same loan amount, the same interest rate, the same everything. Now that same scenario will work even if the guy's only putting 10% down at the beginning, because you can go, the bank will finance all the way up to 95% loan to value of the appraised value, because as a lender, we have to lend on appraised purchase price or appraised value, which is ever less, okay? So we're always gonna lend on the appraised value, right? So even if somebody's putting 10% down, right, and that property comes in at 475, now their loan to value is going to rather be 90, it's going to probably be 94, right? In the same instance, it'll be 94. Well, they're already paying mortgage insurance of X.
It doesn't matter.
The mortgage insurance is going to go up a tad bit, right? So
how about if they only qualify for like 10%, their like total debt ratio and all that stuff when it comes to that point? Like a 10% down or 20% down? No,
the loan amount's going to stay the same. We're keeping the loan amount the same. It doesn't matter. The loan amount is going to remain the same. It's always going to be $400,000. That just means their loan to value is higher. The DTI doesn't change because the loan amount stays the same always, right?
Doesn't make sense.
See, that's right.
makes sense.
Yeah, see. Okay.
So look, if you got a mortgage,
Let me say again. You're buying a house for 500.
Yeah.
You're putting 20% down.
yeah, it's 80 grand
So now you've got
or 20.
It's so basically you've got a $500,000 house
Yeah.
times 80%. You've got a $400,000
Yeah,
loan
400
amount.
loan. Yeah.
Okay, $400,000 loan amount. Now the house
Oh,
comes in
100
at
grand. Sorry. Yeah.
yes, the house
Yeah.
comes in at 475. We're 25 grand short.
Yeah.
We're not going to bump the loan amount up. We're going to keep the loan amount at 400.
400K. Where's the 25K come from?
All we're going to do is take the 25K from the 100,000 that they were putting down.
Oh.
They're now putting down 75. The 25
I
gets
get
slid
it.
over to the
I
other
get it.
side.
You're moving money that's already
It just,
there.
it's there already.
It's already there. You're just
They're-
ratioing the mortgage.
right. They're,
So, but if
the borrower is still borrowing 400
I
grand.
get it. So then you move the 25K, and then ultimately you pay that additional insurance, blah blah
Exactly.
blah, $2,000,
right.
and away you go.
But what happens 99, I had this happen, I've seen it happen in front of me at an open house with another realtor at one time. They thought that, I heard her talking, oh, well, you're going to have to come in with an extra $80,000. She got off the phone. I said, hey, what happened here? Explain this. And she told me, I said, your borrower doesn't have to come in with 80 grand. What do you mean? And I told her about this, and she was like, what? And she wasn't using me as the lender. It was another lender. She's like, hey, can you call my lender and explain? And I did, and they saved
No, it
the
makes
deal.
sense. But I mean, again, the only difference is now, like, you're going to be paying that additional, what do you call that? Insurance what?
Mortgage insurance.
But you're paying, said, $2,000 towards what?
It's to buy it out, so you don't
buy it
have
out.
it monthly. Or you can just say, hey, the mortgage insurance is $50 a month. I'll pay the extra $50 a month.
But what is it?
and not have to come
Usually,
up with
like, what's
25 grand.
on $500,000? What would it be? Mortgage insurance be like?
On $400,000 with a great credit score and a low DTI, your mortgage insurance it's going to be less than $100 a month.
For how long? For the
Term, well, it's
Term
for,
loan?
It's there's a formula there. It's either till you have 20% equity in the property,
I see.
right? Or it'll drop off automatically after you've got 78% in there, right?
okay, so you can bump it up. You can in the year you can put in 20, 30 grand, get it up to 20%.
Yeah, you could do it. That's another.
And then
It's
it's just-
another conversation. You could, yeah, you could
can
do
pay it down a
buy
bit in
down.
a year
Yeah.
and then
You
avoid
could
that.
it's called a recast.
Okay, so
Yeah.
worst case scenario, $1,200 for the year.
Well, possibly.
Yeah,
That's the-
if you put the additional money to offset the 80/20, and then that's it. Or you pay that 2K buy down.
single premium.
Single
You
premium.
buy it out. My point being is,
There's ways around stuff.
if you're putting 10% more or down on a property and the appraisal comes in less than the purchase price, you don't automatically have to think, if I want that house, I have to come out of pocket with that money. You don't. You're already coming out of pocket with your down payment money. All we're going to do is take the money for the down payment. We're going to keep your same loan amount, and we're just going to slide the money
Amazing.
to the-
Do graphs.
Yeah.
And Alex will add it to the
Yeah.
things.
Yeah. So that's just a little bit of a trick that
I'm going to touch on that. Why that came up as well is because we had a deal, and again, this is not just one. There's a few of them now. One of them was one of my investment properties that we built and we sold, and the appraisal came in $45K less. So I don't know what's 700 on 650. What's that? 5%. My math is horrendous
Whatever.
since AI
Yeah.
has been around. But
Right.
let's say 5 to 7%. It
since
came.
AI, since calculators.
No, but before that was good. But it's AI screwed everything up. But anyway, 5 to 7%. I think it came under, right? So you look at these appraisals, and again, why is this thing coming down so low? And then you look at what they're appraising at, things that don't make sense. Like the appraiser had one property, and that was 500K with no pool and a whole bunch of stuff. So to get it up to 700,000, you need like $200,000 of add-ons, which is a erroneous comp, let's call it. And so we look at all these comps are erroneous. So long story short, it came in like 6 to 7% lower. What we did is we asked for a reappraisal. I wasn't going to take the loss. I know they're maybe coming back for money. I'm like, I'll just relist it. I said, it's the value's there. I said, it's not. We're not going to subtract it off of this moron's appraisal. And literally, we got to reappraise. They appraised at 100%, 695 what we sold it for.
Yeah.
Okay, so that's one deal. The other deal now, we had one. Just recently in Verdana Village, and it was a simple model. It was a scenic series, so 42-foot lot. There was 1 million sales, okay? Before I went on the listing presentations with my client, I sent them like an average. There's 5 sales. You're averaging between 435 and 450, okay?
Yeah.
That's what the average is last year, like the last sales. That's fine. Or 445 to 450 or some shit like that. Anyway, so we put it together. We listed aggressively, like to sell it. We had a great house, self exposure, generator, one of the best lakes, let's call it, lake lot rather. And we listed at 469. We blow it at a 465, I think, something of that nature. Yeah, 465. And the appraisal comes in, and then I look at this appraisal, and it's like 10,000 below what we sold for, which is impossible because even the stuff that was like landscape views and crap units were selling for 445. So how do you figure our unit? So then you look at the appraisal, and again, this shouldn't be my job because it should just automatically be their job to get it appraised properly. They were using comps from different communities. They were using comps from the place across the road, but not even a Pulte product. It was a Lennar product, and it was a larger home. It was an executive rather. So it was all like mismatch of and I called it on them. And again, it wasn't me and my client. We spoke, we were going to give them any money back. They did a reappraisal. It came in at its value. But it was just like, again, we're being challenged. If you're not, I don't know.
Did you do a new appraisal or did you do a reconsideration of value?
No, they did a reappraisal. Sent in a new appraiser in.
See, because
the appraisal didn't want the appraisal.
A lot of times, the lender won't allow for a second appraisal, right? If they've already seen the first one, right? Because then they're going to have two appraisals. They're going to always take the lower of the two most of the time.
Yeah.
But the first step is always you want to do what's called a reconsideration of value. So we get that appraisal, we see it's less. And we go back to the agent, and the agent can provide us additional comps to give to the
two separate appraisal companies on both these properties.
Yeah, no, I know, but I'm saying the first step would always be
they asked, and they wouldn't reconsider. Okay. Both appraisers were head in the sand. They were too proud to
But that's typically your first. Yeah. And then, of course, an appraisal is one man's opinion, right?
But it can jeopardize seller, jeopardize buyer, and it screws the deal up. Yeah. And if it's a bad appraisal. But I mean, being like a veteran in the industry, you can go back and provide, like we did, basically give them a whole CMA and why they devalued the property and what they should be added in, which is insulting to them. I get it. But at the same time, like, we have to protect our sellers.
Yeah, that's a lot of times it's pride with those guys, right? 100%. They don't want to admit that they missed something, right? Yeah. So, and you're going to have that. I mean, it happens. And most of the time you can get it turned around. Either the reconsider value works, or you use what we call it as an appraisal gap strategy. So, anyway,
okay, we'll move on to next topic, and this is just events that are currently happening in the market. Before we start, we have to historically fix this flag. Joel, you keep moving it down, Monday.
I didn't. No, it falls. Yeah,
it falls. In my office, someone keeps moving it.
Yeah, it falls.
Oh, okay.
Yeah, it's good.
It looks better like that, but it's got to be.
That's all right. The old flag raising in Iwo Jima.
Well, the wind was at their back. Yep. Usually, if you're in war, that's how you win, especially in the Roman times.
Yeah. So, anyway, current events. Right?
Yes. So a few things happening
in the market, right?
I think just in general, right? Yeah, you can, sure.
Yeah.
Oh, yeah. I'll look at that. I'll get that back to you today. Thank you, Jim. Thank you, sir. Is it affecting the market or just in general?
Well, I mean, obviously the two big things on the table right now is the Iran war, and then of course the latest thing yesterday was that damn Fauci.
Congress hearings with Fauci?
Congress hearing, which was just, they knew he was going to do that crap. Just sit there and plead the fifth. I mean, come on.
So what happens with that? He pleads the fifth. Nothing happens. It's just basically they berate him for 3 hours.
They embarrassed them more than anything. Yeah. I mean, I don't know. They're going to go back and see, but I mean, they should have just thrown the goddamn guy in jail, man. He
had a presidential pardon, right?
Yeah, I know. Yeah. Which they're going to go back and look at that too.
Auto pen?
Yeah, the auto pen, but I don't know, man. My opinion on that is we all lived through it, and a lot of people lost their lives over it and interrupted people's lives and wrecked businesses, and meanwhile he's out having gallivanting, and he thinks he's the greatest thing since
evil. Yeah, sure evil. It doesn't even make sense.
Yeah, horrible. Yeah.
I mean, we went through a pretty heavy up north as well.
I wanted to jump to the TV screen yesterday and just strangle this guy myself. He just got a look to him, just an arrogant look to him.
Untouchable, right?
Yeah. Just knew it. He kind of knew it. It just, no remorse. I mean, I don't know how he sleeps at night,
Yeah, it's pretty disgusting.
It's horrible.
we went through it pretty heavy up north as well, like during all the lockdowns. And the problem with what happened was it created a lot of division between family members, between friends, between business owners. It created more division than it did anything, because like if you didn't get vaccinated, it was a tribe, right? And then you became very like
arguments with family members on one side.
Theory,
Oh yeah.
And then you had the other side that was very pro, and it's like you got to do it for the government, and it's just like, but the government, you've never done anything for the government before, nor has it done anything for you, so you're gonna do it for the government. You're hearing a lot of this, and there's a lot of, and again, thankfully in today's society we have additional media that we can listen to, like basically non-legacy media that was promoting this thing as the cure. Because remember, when this thing first came out, I remember my dad was in the hospital then. It was in March. We just came back from a cruise in Jan 20th, and it was you started hearing China building a hospital in 10 days. I'm like, I told my wife, this is pretty serious shit. Does it come over here or not? And then literally, progression and things started just shut down, I remember. And you believed it, right? Like legacy media was going at it, and everyone was like, panicking this whole thing, and there was this masks everywhere and distance between standing in a line. It was pretty crazy. It was very 1984.
Well, you were seeing
Orwellian. It was very Orwellian. Very
movies were coming to life in front of you, right?
And stuff like that.
All that stuff. I mean, you were seeing it. It was like, wow, is this shit really happening? This is weird. I mean,
100%.
The world visually just looked different. The streets,
everything felt different. Everything felt icky.
Yeah, it felt horrible.
Yeah.
It was whatever. I mean, it was bad times. It's hard to believe it was that long ago.
Yeah, but but again, you look at other people, the psychosis of everybody that went against, other people that were vaxxed or not vaxxed. It was pretty insanity, like how division started and where it is.
Yeah.
And then, like Fauci now, like we learned about this early on. It wasn't created in a lab. This is why I'm actually in the States, to be honest. And we didn't we're non-vaccinated as a family. Even all my employees up north. But it was like, one of those where all our freedoms were taken away overnight and literally treated like, it felt like we're going to be put into a ghetto and taken all our possessions. It was really extreme where we were, I got to be honest. And that opened my eyes about the country not having, Declaration of Independence, clearly the Bill of Rights in the United States. Like, you don't have those rights as a citizen. You realistically don't have anything going forward. And we witnessed that. That's one of the main reasons as well, to move to a state like Florida, where it's free.
It was equal
Chicago.
to you in Illinois, in Chicago. It was blue state, and it was heavy lockdown. I mean, it's the same way. I mean,
it's pretty crazy.
Couldn't go anywhere, right?
It's nuts. And then if you think about like, if you're left wing or right wing, the left was always anti-pharmaceutical, anti-big corporation, and then it flipped the roles. Like the right was actually freedom of speech, do what you with your body and the whole thing. It kind of swapped roles, and it's hilarious because left used to be something different. Now it's totally different. It's unrecognizable, and it's like the right has now become like let's say an old school Democrat, the same mentality, right? It's kind of weird how everything's swapped and flipped.
Yeah.
And this is what we were talking about earlier. Like, politics is bullshit. You should never really pick a tribe. You should basically, I think, unity between people, and ultimately, clearly, like I'm a Republican, I'm on the leaning right of definitely 100%. But that's also because of my conservative values.
Yeah, I'm the same way.
Yeah,
I'm the same way.
So
I feel the same way. But again, I'm just kind of now I'm starting to just kind of be like, I'm not right, I'm not left.
Yeah, I'm not going to argue with somebody over.
No.
We've been hustled so long, right?
Yeah.
It
just makes no sense.
Yeah.
But anyway, we're here in Florida, Sunshine State of the market. Everything's
It's not sunny today.
It's not. No, Jesus, we haven't had any rain, any sun down there. It seems like rain every day.
Yeah, it's been, yesterday was nice and hot.
Yeah, it's good. But otherwise, good, man, and glad to be back in the chair here with you.
Sounds good, for sure.
Until next time. How often are we going to do these now?
We got to do it at least, what do you think, Alex? Once a week? Do something, like a follow-up.
Yeah, once a week.
Once a week?
Yeah.
All right. Anyway,
We should do something like 20, 30 minutes just to go. Maybe just a weekly update.
Right.
Quickly.
Yeah. All right, wrap it up.
Yeah. Thank you all for watching. You can follow us on YouTube, clearly our channels, and also Joe at, what's your Instagram handle?
You can find me at loansbydemarco.com or DeMarco_629 on Instagram.
Nice.
Or you know where to find me.
Yeah, fair enough.
If you ever have any questions, need help, answers, I'm always here for you.
Awesome. Thank you so much. Have a good one. Love.
Good?
Yeah.